This is our Forex blog for November 13th, 2012. And like we do most days, we start with our currency meter, which now includes all time frame statistical trends. We measure very fast 2-minute, 5-minute, 15, and hourly trend, both direction and intensity. And we now have a weight for the daily, weekly, monthly, all-in-one, easy-to-read indicator. In the past, we would show all the different time frame trends separately, and a lot of new traders found it more complicated. This makes it very easy. You can see the yen from last night, a couple hours before midnight until 4, was clearly the strongest one. One of the weakest ones was the euro. The Swiss also was weak, and to a lesser extent the pound. Let's just bring up the euro yen just to show last night up until about 4 how you would want to be looking for sells in this. All right, here's the euro yen. You can see that the daily, weekly, monthly trend was down during this period of time right here when it started to inch its way up. You can see the daily trend shifted up. Anytime you see a previous strong downtrend and then some green come in, it's very likely to go back to red very soon, which it does. And that would make all the longer time trends, daily, weekly, monthly, all down. You can see the hourly moving average there in the minute. In the middle, the previous day's low right here. And when it breaks down right there, you have a very high probability short. Our currency meter showed it was one of the weaker ones, and of course it does fall about 20 pips. You got a sell trade right here, and it falls another 20 pips. And anytime you look for sells, you can just simply wait for or draw kind of a trend line underneath the bar's highs, or lows in this case, and you hit a sell signal, wait for that trend line to get broken, and then just put your stop right above that bar high. When it goes down, you move your stop above that bar's high. When it goes down, you move your stop above that bar's high. So with a trade like this that doesn't really pan out, at least you can make 4 or 5 pips. It comes back up, barely makes a higher high. It doesn't give a sell signal here because it's not enough of a pullback off that last swing low. But given the fact that you had a sell signal here before, you could look at the statistical momentum. If that bar down has weakness here, you can do the same thing, sell it, and maybe make 8 or 9 pips. Comes up again, it's not that strong. Notice all the down moves have incredible weakness, the up moves have no strength. You get a short again right here, and it falls about 20 pips. Short again here, maybe make 8 pips there, short again here, 10. And this sell signal here, this is the first one that has a lot of statistical trend strength. So, and it had many opportunities to make a lower low. This is our lower containment band where it usually finds some support and bounces, which it did each time. And so when it finally made a higher high after having every opportunity to make a lower low, it wasn't able to go through our bands. You might want to decide to wait on this trade, wait for it to come back to the hourly, and then sell it. If you sold right here, you'd have your stop above here. Bar goes down, then back up, you'd lose 5 pips there. If you got short again here at the hourly, it's kind of going sideways. And notice how strong it is. So, that being the case, when it goes back above the hourly, you might want to go long here. And some of our signals are based on the point of control. This is the yellow price is the price most traded yesterday. The lower one is in the green one, and the red one is where 68% of yesterday's trading activity happened. When it goes from below the lower point of control to above it, typically it's bullish. We don't put buy signals on the chart because it's all 100% dependent on what the latest momentum is, and it's kind of a discretionary type trade. But anytime you see the currency go up, find resistance there, breakout, pretty much people that were longer term short from yesterday are now losing money as it gets into this area, because 68% of traders' activity from yesterday was in this area from the green to the red. Usually it's a much farther number of pips away. From the green to the red, most of the time it's 30 to 50 pips away. This one's very tight. Spent a lot of time yesterday in a very narrow range, and because of that, when it goes back into this range, a lot of stops are going to get hit. That's what caused it to go up. You want to look to sell at the upper band as the statistical strength leveled off here. That's a pretty high probability trade for a quick scalp. But mainly you want to use our currency meter. Focus on the ones that are most trending. You can see after 4 it lost its strength. It became weak for a couple hours. And then at 7 to 9:30 it became strong again. The euro was relatively weak during that period. So if you want to sell it from 7 to 9, that would make sense. Here's 7 o'clock right here, and guess what? Till 9 right there, it fell 10, 20, 30, 40, 50 pips. And another way of trading is to use the fibs in conjunction with our patterns and our real-time momentum tools. Anytime you get a move up, draw your fibs. And most of the time, the first or second fib target is where it's going to run out of steam. Sometimes it goes a few pips above it. If you see one of our bands up here and the longer-term trend, weekly and monthly trend is clearly very weak, you can sell the double top right here. And you can see our sell signal right here, number 24, trend sell. It's one of the newer higher probability patterns that I've found. It's very high probability. The higher the probability, have bigger triangles. You can see these are really tiny because they're, maybe 55, 60% likely to work. This one's 70, 80% likely to work, and that's why it's a bigger triangle. You can also see a lot of strength in the dollar, followed by very little weakness during the pullback. And anytime you see that, you want to continue and look for trades in the dollar. Anywhere from 15 to 30 minutes after a little bit of weakness, it's likely to resume its strength. And so, coming up to 7 right here, let's scroll this back so we can see what other currencies were doing. The euro had quite a bit of weakness before and very little strength during that up move, statistically speaking, when you weighed in all the different time frames. And so looking to sell the euro dollar at 7 also makes a lot of sense. Let's bring that one up. This one luckily had yesterday's point of control upper and lower value areas right near our upper bands. And anytime you see that type of pattern, the green upper value area, which is where it spent 68% of its trading activity during the previous day, in this little range right here, very tight range. So the upper one, especially when it's right near bands, very high probability sell if the longer term weekly monthly trend is down, which is it is here. So you could go short right there and make 10 pips, make 15 pips. You've got a counter trend signal here, which counter trend signals that are very high probability I mark green or red. Lower probability ones are gray. It doesn't mean that it's not a good trade. Just all based on the statistical likelihood of the counter trend trades. I want to show the highest counter trend likelihood with bigger circles and colored ones, and lower probability ones with gray. So when it's at the upper band right here, you can see this double top right here had less strength the second time than it did before. And using the currency meter, we were anticipating dollar strength and anticipating euro weakness. And you can clearly see it by bringing it back up again here. Previous momentum moves up with a lot of strength, followed by very little weakness. We're assuming at 7 the dollar is going to have strength again. Extreme weakness in the euro dollar, about 45 minutes of very, very mild strength. We're assuming weakness again. And as you can see, that's exactly what happened in both. And that's why that last trade there in the euro dollar fell from 27.30 all the way down to 70. It's almost a 60 pip drop. And it's not surprising because the longer term trend, daily, weekly, monthly trend is down. And even during that up move, it just barely got strong, just for a brief amount of time. And like I said earlier with the euro yen, anytime you see some green come in there in the daily trend, if it's at an extreme, when trend starts to go back down again, that's going to flip down to a downtrend. You don't need to wait for it to go red, but it did go red pretty early right here, and it kept you in that trade all the way down. Anytime the market works its way back up, you can always draw your fibs on a decent sized move. The 34 pip move is pretty decent size. Notice this fib target right here happened to line up right where yesterday's value area high is. We had a counter trend gray signal right here. The only downside of this trade is there's quite a bit of real-time momentum, but the longer time frame trend is down. You could have shorted this somewhere around here at 16, and you can see it pulled back. Even during the dead time of the day, you got 10, 15 pips here on this short. It's a very high probability trade. So use fibs, use your own analysis, use our buy and sell signals when they line up with what you think the market's going to do, and use the real-time momentum to stay with powerful moves like this and catch explosive moves down. And a lot of times you'll find if you sell right here and the market's coming down and there's not that much weakness and it previously was weak, guess what? The trade's not going to work. So you get to have your trade, near break even. If you bought the breakout from below to above the hourly right here and you see extreme strength, you stick with it. And this is our digital signal processing based moving average, 5-period moving average shifted 2 bars to the right. It makes an excellent entry tool. Also, a lot of traders just flat out, if they decide the market's dead, they buy when it goes, from below to above it, out with a small loss, small 4, 5, 6 pip loss, 8 pip win, 30, 40 pip win. And the key to trading is just small losses, big wins. There's nothing more advanced than that. So don't worry about whether the trade works or not. You can always get back in again. You can always trade bigger lots on the second and third trade if you have a loss or two in a row. If you think about it, if you have a 20 pip win with double your original size trade, that's equivalent to 40 pips. So if you lose 5 pips, let's say you lose another 8 pips, or 2 10-pip losses in a row, right? That's 20 pips. If you double up on the third trade and you get 20 pips, that's equivalent to 40 pips. So now your net is up 20 pips based on your original trading size. And that's what I do, and that's why I don't really worry too much about losses. I will trade what I consider to be a relatively small size until I'm up a decent amount on the day. Then I trade more aggressively. And if I start off with a loss or two, I'll wait very patiently, sometimes for 2 or 3 hours for a very high probability trade, take a very big lot position and get back to even. Or the goal is obviously to be up on the day, and most of the time it works. As you can see, if you took that trade here, you made money. If you bought here and lost, all right, you lost. You did a bigger size trade here, you made money. You took this trade here, you made money. You took this trade here, you made money. You only need 1 out of 3 trades if you trade with proper lot sizes, and keep that in mind when you're trading. 1 out of 3 trades working by trading larger lot size than the third one to do very well trading, without any fear or anxiety trading. So if you have a small account, trade very, very tiny for the first and second trade, and then when you trade the third time with bigger lot size, you're still trading relatively small lot sizes for your account balance.